Consumer demand for gold fell by 50% in Turkey in the second quarter this year, a development in parallel with global customer tendencies, a World Gold Council report showed on Thursday. Gold demand hit a six-year low in the second quarter, Thursday's report said, as sluggish price movement and the prospect of better returns in equities curbed interest in the metal. A drop in the price of gold to as low as under $1,120 an ounce prompted some central banks to boost their positions in the precious metal, which is used to hedge against currency and credit risks. Turkey, the world's 12th largest nation in terms of gold ownership, raised its precious metal by 9.9 tons to 512.9 tons for the month. It counts gold held on deposit with it by commercial banks as part of the central bank's bullion holdings. Demand fell 12% to 914.9 tons, with declines in China and India accounting for nearly half of the drop, the WGC said. Globally, jewelry buying fell 14%, investment slid 11%, and central bank buying was 13% lower. Gold demand fell nearly a quarter in the Middle East in the last quarter, while US and European consumer demand rose, however, with European investors buying on concerns over Greece. Jewelry demand came under pressure from negative consumer sentiment, while investment was a casualty of directionless prices and stock market gains, the WGC said. Chinese consumer demand fell 3%, with consumer sentiment damaged by volatility in equities and concerns over decelerating growth. With offtake of 216.5 tons, China remained the world's biggest gold consumer. In number 2 buyer India, jewelry consumption fell 23% as rural incomes were knocked by severe weather, while investment slid 30% to a six-year low, hurt by competition from equities and uncertainty over price direction. Spot gold was heavily range-bound in the second quarter, with the spread between its highs and lows the narrowest of any quarter in 8 years. Prices have since dropped sharply, hitting a 5-half-year low late last month. Lower prices should lead to better demand in Asia in the full year, the WGC said. This week's devaluation of the Chinese yuan is also expected to boost demand, it added. One of the big narratives for the development of the global economy is that the renminbi, yuan, will attain an ever greater role in global financial markets, the WGC's market intelligence manager Alastair Hewitt said. For it to do that, it needs a floating exchange rate, and it needs to internationalize. As that happens, we're going to see greater degrees of volatility within currency markets and within financial markets. Those factors will ultimately underpin gold demand as people look to hedge their risk. European bar and coin demand rose 19% or 7.3 tons, against average declines of 1.7 tons across other markets. Investment in European exchange-traded funds rose 6.6 tons in Q2, compared to an outflow of nearly 23 tons in ETFs globally. Demand for bars, coins and ETFs was boosted by the Greek crisis and the possible threat to the stability of the euro area, the WGC said. In the full year, the WGC expects global demand to reach 4,200 to 4,300 tons, it said. Last year it totaled 4,220 tons.